Everything you've been taught about passing a prop firm evaluation and getting consistent payouts is actually holding you back. We've just analyzed 19,000 traders at Phidias prop firm, and what we found completely contradicts the common wisdom. Let me show you what we discovered. We found the strategy that winning traders actually use, and it will surprise you. We found out the most profitable times of the day to trade, which instruments are actually the most profitable. We found how winning traders manage their trades and why most traders get this completely backwards. We found which account type has the highest success rate, and it's not the one traders pick the most. Over the next few minutes, I'm going to reveal everything. 5 secrets that separate traders who pass, get funded, and build consistent payouts from anyone else. Plus a bonus secret at the end, how the highest earning traders at Phidias are scaling their earnings in a way that's not possible anywhere else. This is 19,000 traders worth of data condensed in this 2026 exact blueprint. Let's start with secret number 1. And this one is going to challenge everything you think you know about finding the best trading strategy. If you spent any time on trading YouTube or X, you've seen it. This is the best strategy that will make you profitable. The only one setup you need, the secret pattern pro use. So we went into this data looking for it. What's the strategy? What's the common thread among the winning traders? And what we found, there actually isn't one. After analyzing 19,000 traders, here's what we can tell you about the best strategy. It doesn't exist. We saw profitable traders using ICT concepts, order flow and tape reading, simple support and resistance, indicators-based system, and much more. Every approach had winners, every approach had losers. But here's what we did find as a common thread among winning and consistent traders. They adapt. The consistent traders aren't married to one rigid system. They have a framework, but within that framework, they adjust based on market conditions. Different position sizes for different volatility, tighter stops in ranging markets, wider stops in trending markets, different profit targets based on the setup quality. The best way I can explain it is they categorize market conditions and have specific rules for each category. For example, high volatility day, high VIX or news catalyst, reduce position size by 30 to 50%, wider stops, and faster profit taking. Low volatility range days, standard position size, tighter stops, and target the range extremes. Trending day with clear direction bias, full position size, trail the stop, and let the winners run. It's just to give you an idea, but the specific rules varied by traders. The principle was consistent. They had a plan for different market conditions, not just one rigid system. Secret 1 blueprint: stop looking for the perfect strategy. Start building an adaptive framework. Define 2-3 market conditions categories, set rules for each. The market changes, your approach should too. Now that we covered how to approach strategy, secret number 2 reveals a mindset shift that separates traders that just pass evaluations from traders that actually build lasting success. Here's what most traders do. They get an evaluation account and think, I need to pass this as fast as possible. Let me be more aggressive, hit the profit target, and then I'll trade properly on the funded account. The data shows it's completely backward. The traders who pass the evaluations and reach consistent payouts, they trade the same way from day one. No difference between the evaluation, the funded account, or the live account. We tracked 2 groups. Group A, the rushers. Traders who traded aggressively just to pass the evaluation. Bigger position sizes during the eval, pushing for quick profits, taking more risk. Group B, the consistent ones. Traders who maintain the approach throughout. Same position size logic, same setups, same risk management they then used on the funded account. The results? Group B took on average 2 more days pass their evaluation than Group A. But here's the key. Group B had a 5x higher chance of reaching their first payout. 5 times higher. 2 extra days on your evaluation versus 5x better odds of actually making money. The math is clear. And the reason is simple. Habits. When you trade aggressively just to pass the evaluation, you build aggressive habits. Then you get funded and suddenly those habits don't serve you anymore. You're fighting against your own muscle memory. But when you trade your evaluation like it's your money, you're building the habits you need for the rest of your trading career. The evaluation isn't an obstacle to get past, it's your training ground. It's where you prove to yourself that your approach works. The winning traders understand this. They are not trying to pass the evaluation, they are trying to trade well. Actually, passing the eval is just a byproduct. Secret number 2 blueprint: before you start your evaluation, define your strategy as if it's your capital. The different position sizes, the maximum risk per trade, the maximum daily loss, all of it. Then you trade that exact strategy on evaluation, on funded, on live. Build the right habits from day one. The traders who do this don't just pass, they stay funded. Now, speaking of building the right approach, secret number 3 is where it gets really interesting, because what we found about instruments completely contradicts what most trading coaches teach. Go watch any trading YouTube video. What do they tell you? Master one instrument, focus on Nasdaq, learn every tick of NQ. Don't spread yourself thin. Makes sense, right? Specialization? We assume the data will confirm this. Top traders focusing on one market, knowing it deeply. But that's not what we found. The best performing traders at Phidias trade on average 3 different instruments. So here's the ranking by traders' success rate. Number 1 is gold, the highest success rate among all the futures contracts. Number 2, Nasdaq, the most popular choice, solid result. And number 3, S&P with consistent performers. But here's the insight. Traders who only traded NQ had a lower success rate than traders who traded NQ plus another one, NQ plus gold, NQ plus Russell, NQ plus Dow Jones. The reason comes back to secret number 1, adaptation. Some days gold is moving and Nasdaq is choppy. Some days ES has clean setups and NQ is a mess. The traders who could recognize this and go where the opportunity was, they didn't force trades in dead markets. The single instrument traders, they'd sit there forcing trades on NQ while gold was giving A+ entries. The multi-instrument traders could say, NQ isn't giving me anything today. Let me check gold. And they'd find their opportunity there. It's giving them the flexibility, going where the edge is. That's what separates them. Now here's where it gets really counterintuitive. Which trading session had the best performance? Most gurus will say, set out the first 30 minutes, wait for the market to settle. Only trade the 10-11:30 window. Our data shows the opposite. The best performing session 1 hour after the US Open. Specifically, the first 30 minutes showed the strongest results. You know the exact window everyone tells you to avoid? That's where the best traders were making their profits. Why? Volatility, movement, opportunity. The traders who knew how to navigate the open momentum, they thrived. Secret number 3, blueprint, learn at least 3 instruments. Have your primary, but develop the ability to move to alternatives to go where the opportunity is. And don't automatically seal out the open. That might actually be where your edge is. Now, secrets 1 through 3 were about how to trade. Secret number 4 is about something completely different. It's about who you need to become. This one isn't about strategy, it's about showing up. When we looked at traders who reached consistent payouts, there was a behavioral pattern that stood out above everything else. They trade every single day. I don't mean they take 50 trades per day. Some days it's just one small position, a quick scalp, just to test the waters. But they show up. They stay connected to the markets. They put in the time. We tracked trading day frequency against success rate. The correlation was clear. Traders who traded 5 days per week had significantly higher payout rates. Traders who traded sporadically, big week, then skip a week, come back, much lower success. It's not about quantity of trades, it's about presence. The market teaches through exposure. Even if you take 0 trade, but you watched, you're building pattern recognition. Traders who show up consistently develop a feel that traders who pop in and out will never develop. Here's something else that data showed us. The best performing traders, many of them had multiple failed accounts in their history. They blew evaluations, they blew funded accounts. They went through the frustration, the self-doubt, all of it. But they didn't quit. They analyzed what went wrong, they adjusted, and they came back. And eventually, they figured it out. The traders who are putting consistent payouts today are not the ones who got it right on the first try. They are the ones who refuse to give up after getting it wrong. Secret for blueprint: show up every day, even when you don't feel like it, even when the market looks dead, even if it's just to watch or take one trade. And when you fail, because you will fail, don't let that be the end. Let it be a data point. Learn from it. Come back. The traders who make it, they aren't special. They are persistent. Alright, now we get to secret number 5. And this one surprised even us, because the data revealed which account had the highest success rate. And it's not what we expected. If you're choosing a prop firm account, you probably think, I should start small. 25k, 50k valuation, just to prove it to myself. Then I'll scale up. Or maybe you think, I'm an intraday trader, I don't need overnight holdings. The data tells a different story. The account with the highest success rate at Phidias is the 150k swing account. And it's not even close. 2 reasons traders outperforms on this account. Reason Reason 1, maximum drawdown room. The 150k account gives you 4,500 end of day drawdown compared to the 2,500 of the 50k and the 3,000 of the 100k. It gives you more room to breathe, more room to let trades work, and more room to survive a normal fluctuation of the market. The traders on the 150k account don't get stopped out on minor moves. They can manage positions easily. Reason 2, swing capability. Remember secret 1, adaptation? The swing account lets you hold overnight and over the weekend. This means you can enter a position late in the day and manage it properly. You're not forced to close a winning trade because the session is ending, and you can trade setups that need time to work. The best traders aren't just intraday scalpers. They take the best opportunity in front of them, and this is exactly what the swing account allows you to do. It gives you the full freedom. There's actually a third factor that's harder to read, but it's very real: having meaningful profits. Think about it. On a 50k account, if you're being conservative, you might make a few $100s on a good day. Then you have some losing days, you give some back. At the end of the week, you've put in the hours in front of the screens for what feels like not much. That can drain motivation. On a 150k account, you can go for $1,000 plus days without over leveraging. Same effort, same focus, but the results feels different. And that psychological difference matters. When you feel like your time is producing meaningful results, you stay motivated. You show up, you stay connected, you stay consistent, which ties directly to the secret number 4 we just talked about. The account size actually impacts your psychology, which affects your consistency, which affects your results. Secret number 5 blueprint. If you're serious about building consistent payouts, strongly consider the 100k swing account. Yes, it costs more upfront, but higher success rates means higher chances of getting funded, staying funded, and building consistent income. Think of it as an investment in better odds and in your own motivation. The data is clear and the winning traders already figured it out. Now we've covered the 5 secrets, but I promised you a bonus. And this one is specifically for traders who want to scale. This is how the highest earning traders at Phidias are building massive income. Once you're consistent, passing evaluation, getting funded, putting consistent payouts, the question becomes, how do you scale? How do you go from a few $1,000s a month to serious income? We looked at our highest earning traders, the ones pulling $20,000 per month or more. They're focused on growing their live account. So here's the path most traders don't fully understand. Cash accounts, your sim-funded accounts, have payout caps and minimum trading days requirements. That's by design. We need to verify consistency. But the live accounts, real money, trading real markets, you have daily payouts, no limits, and no specific requirements. The traders making $20,000 plus per month at Phidias, they are building one powerful live account. And here's how they are doing it. This is where Phidias does something no other prop firms offer: the Phidias wallet. Once you pass your evaluation, you get to a cash account. Your payouts go to your Phidias wallet. From the wallet, you can do 3 things: buy more evaluations, withdraw everything to Rise, or transfer your funds to the live account. The last option is the scaling strategy. Our biggest traders are using their cash account payouts to fund their live account. They are essentially transferring their sim success into real funded capital. And here's what makes it powerful. Once you have your live account, you can keep buying more evaluations, getting funded, and getting payouts. Every payout from your cash accounts can flow into your live account, growing it and funding it to create a real trading business. But this strategy, continuing to stack funded accounts while you have your live account, is not possible at any other prop firm. At most prop firms, once you go live, no more evaluations. You're locked in. Our $20,000 plus per month traders already figured this out. Multiple cash accounts generating payouts, payouts flowing into the live account compounding and getting some profits daily, reinvesting it into more evaluation. That's how you scale, and that's how you build a real income. And it's only possible here at Phidias. Now let's bring it all together, the 5 secrets from 19,000 traders analyzed. Secret number 1, there is no single best strategy. Adaptation beats rigidity. Secret number 2, trade your evaluation like your own personal account. Build habits that last from day one. It might take you 2 more days to pass, but 5x better odds of success. Secret number 3, learn to trade multiple instruments. Learn at least 3 instruments to find the best opportunity every single day. And don't fear the open. That's where the best results are. Secret number 4, show up every single day. Stay persistent through failures. Consistency beats intensity. Secret number 5, the 150k swing account has the highest success rate. More drawdown room, more flexibility, more meaningful profit. Bonus, once you're consistent, focus on growing your live account using the Phidias wallet features to compound your earnings. That's the blueprint for 2026. It's January 2026. Clean slate. If you've been waiting for the right time to start or the right time to start again, this is it. The data is clear, the path is mapped. The only variable is your execution. If you're ready to start with Phidias, click the first link in the description below and use the code PPYT at checkout to get the best discount available. We've got over 19,000 traders on this journey. Let you become one of the success stories we'll analyze next year. 2026 is your year. Go make it happen. It was William for Phidias Prop Firm. I'll see you in the next one. Ciao.